Hello guys, good evening. Let's get started. Let's see what we can cover up for today. So let me share my entire screen. Okay, so today we'll be talking about some key concepts in trading. There's some concepts that we use in trading. So that's what we'll be talking about. So this is like the part 8 of the class. We've done part 1, part 2, part 3, part 4, part 5, part 6, part 7 as well. So this is the part 8 of it. So I think this one might be divided into three based depending on how we're able to cover the classes. So if we're able to finish them in two, maybe in two more meetings, then fine. But if I'm not able to finish it, then it might take up to at least 3 meetings. Like that means like 3 more classes to see if we can cover up for it in general. So let me just write that down here. Let me use this. Let me just put that down here. So, key concepts in trading. So this is what we'll be talking about today. The key concepts in trading. So I'll be sharing my screen because I've already written down what I want us to discuss about. So we'll just follow there and then we'll explain. So these are just like some key or little some just some keywords or things that you need to really know in trading, and they are very, very important as well. So everything that we're talking about today is very important. So I don't know if we can cover up all of them for today, but if we can't, then we'll have to shift it maybe to tomorrow's class, right? To the next, maybe the part 9 of it. So let's see what we can cover for today. So let's get started. So let me share this because I've already written that down already. So these are the key concepts in Forex trading. So this is what we're talking about. So the first thing we're talking about is market analysis. Now, we have two um, we have two types of market analysis, right? We have two types of market analysis. The first one we call, mostly you hear people say there are three types, right? You hear most people say there are three types. But what we're talking about there is two market analysis. So the first one being the technical analysis, while the second one being the fundamental analysis. So most of the time you hear people even say sentimental analysis as well. So, but these are the main two that we're covering for today. So that's why I say there are two types of and market analysis. So we're talking about the technical analysis and then the fundamental analysis. Then we'll continue to see what we can cover up. So this can really be self-explanatory, but now when we talk about technical analysis, what we're really talking about here is it means studying charts and patterns to predict price movements. So in our previous videos, we already talked about chart patterns, right? We talked about at least some few chart patterns which we discussed. So you should also understand what this really means. It's just you studying the charts and then studying patterns to predict price movement, whether the price may be going up, going down, or maybe just consolidating. That is like moving, not really going up, not really going down, but just maintaining up and down movement. I will also show an example of that. So let me go back to my um trading platform. So now we have, I think, let me also do, now you can see whatever you see that is going on here, right? Whatever you see going on here, this is an example of what we mean by technical analysis. So when you're analyzing, right, you can see me analyzing my chart. So this is the trade I took today, right? So it's still really moving, but the market is really being slow. So like my take profits, it's all the way up here. In fact, here, but just to keep it simple, right? Yeah, so just to make something simple, keeping our take profit just here, right? So, but if it breaks past here, give me another if this break past here, right? If the price break hits my take profit and give me another reaction, that's my strategy here. I'm still going to enter the trade to the next TP2. If you give me same thing here, I'm going to enter again to TP3, final TP, but just keep it simple. So what are you talking about now? Technical analysis. You just you studying your chart. So this is me now studying my chart, right? And then studying patterns, right? I see here studying charts and pattern to predict price movement. So if you study chart and pattern, you can remember we talked about some patterns, right? Where we talked about head and shoulder, we talk about morning star, evening star, we talk about tweezer top, tweezer bottom, right? We talked about doji. Okay, those ones are candlesticks. Uh, yeah, we talk about inverse head and shoulder as well. Head and shoulder, double top, equal highs, the double bottom, equal lows. So we also talked about it. I think those are the really main ones we talked about, right? So this is what technical analysis, you analyzing your chart, you studying your chart, right, to see patterns, reaction based on what you trade, right? So if you're trading, let's say just candlestick patterns, right? But you can't really just focus on trading because you have to have other confirmations again. So let's say you are just trading maybe candlestick patterns, candlestick pattern. Now that's you doing technical analysis. That's what really technical analysis is. It's just you analyzing your charts, right? Just analyzing your charts and patterns, or you predicting the price movement from one place to another. So that's what technical analysis you means. So when you're using all these your tools, right? When you're using any tools based on, like for instance, maybe trade I took, right? So all these lines you're seeing doing this, like all these lines you're seeing, this is me analyzing my chart, right? Predicting the price movement that I'm expecting. Now, for instance, this trade now, I'm expecting, or I'm predicting that the price, right? So let's use the word predicting. So I'm predicting that the price will push all the way up here and even reach here as the final take profit, right? So I'm just risking about maybe 12 pips here to make it 1 pips at this point here. So maybe if it pushes up here, which is like 1:6.6, if it pushes here, which is like 1:10, and here it should be like 1:15 or 16. So this me analyzing my chart, this me studying my chart, right? This me predicting the price movement of euro versus USD. Because if you check here, this is the euro versus the US dollar. So this me predicting that, okay, this price might pull up from here and even reach this place at the final take profit, right? So this me analyzing, this me predicting the market because I'm predicting the price movement of Euro USD, right? So that's what a technical analysis means. It means studying charts and patterns to predict price movements. Now, then we move to the second one, which we call the fundamental analysis. Now, fundamental analysis meaning it means analyzing economic and financial data to determine asset value. Example of platform we use. Okay, these are the example of platform I gave. We have actually different platforms, right? But I'm going to show you this one. So we have different platforms. I also show you the main ones I use here. But we have a lot of Forex fundamental, where we do check our fundamental like news, right? So now fundamental analysis, it means analyzing economic and financial data to determine asset value. Now this fundamental analysis is like based on a country, right? Probably we have news, let's say news based on, for instance, the United States now, right? The United States are having news based on maybe inflation, unemployment rates, right? So all those things are what we call fundamental analysis. This is us now analyzing the economic of or financial data of a particular currency or a country, right? So whether the economy might be good or might be bad, right? Or we expect it based on this news that is coming out, we expect the price to push up or to drop, comparing different currencies together. So this is what the fundamental analysis. So it's just us analyzing economic and financial data to determine asset value, right? That's the value of the currency of any particular instrument you'll be trading. So the platform which we talked about, I say we're going to check it, which is the Forex Factory, my FX, my Forex book, and investing.com. As I said, etc. There means there are other sites as well you check, but the main ones I use my FX book. So let me start from Forex Factory. So all you just need to do is to go on your Google, right? Go on your Google and so let me go to Google because I already have it, based on. So let me just go to Google, right? So when you go to your Google, then you just type Forex Factory. So let's start with factory. So forexfactory.com, right? Or Forex Factory is going to open. So this is the first thing you're going to see here, right? So click on it, forexfactory.com. Now it's going to bring you to this page, right? So this is what we check. This is how we check news, right? This is how we check news. So now if you, it will just bring you to this place, this is what you're going to see. So now if you check today is 24th of April, right? So you can see the date here, 24th of April. Now, these are different news based on the country, right? It's based on the country, right? So you can see here we have the Japanese yen, here we have Australian dollar, here we have the euro, the GBP euro, US dollar. So you can see different this thing here, right? You can see different. So you can see here it's also showing Thursday because today is Thursday, right? So if you click here now more, you see for Friday, Saturday, Saturday as well. But you know we don't trade Saturday and Sunday, so you can see there's no really anything showing on Saturday, and then we move to Monday. So you can see these are different news based on every country's currency. So now there are key things you need to focus on here, right? There are key things you need to focus on when you are trading the fundamental analysis. You are trying to combine it with you trading, right? Because you are combining fundamental and if you really want to maybe take profit in a very good way, right? To like maybe hold for a very long period of time, you can use fundamental to back you so that you will not be your emotions might not really be attached to that trade, things like that. So mostly I really use this, right? Especially when they are very key um news in the market. Like I also list like at least three news that um usually comes out, right? And those news are very, very volatile, right? They're very, very volatile. You can make a lot of money with the news and you can lose a lot of money and even blow your account with those news. So these are the key things you need to, please, you need to pay attention here, right? You need to pay attention here. So let me expand this screen properly. So you need to pay attention here, right, guys? You need to just pay attention and listen to what I'm saying here. So when you open this Forex Factory, this is where it's going to bring you, right? Now, one thing you should notice that this you see this place that writes previous, right? You see previous here, you see forecast, and you see actual, right? So now what this is mean that the previous news that came out the last time, right? The previous this now for the JPY, the previous news that came out, right? And the last time that maybe the last Thursday of this day, maybe last week Thursday, right? The previous news that came out, or maybe if it's probably something that happened every month, right? Or maybe once in a month, depending on the news. So let's say it's something that happened once in a month, right? So if it happened once in a month, that means let's say the previous news that came out last month, right? On this same day, 24th, right? On 24th of last month, right? The same news that came out the previous was reading 3.2%. Right, that was the previous news that came at 3.2%. Now, this forecast, these are people forecasting that what they are like speculators. These are people forecasting what the price might be based on the economy or how things are going in that country. So they are trying to forecast what the maybe how this is going to affect the market, right? So they are forecasting now. These people are forecasting 3.0, right? So now, if the news is not out yet, you will see these two, the previous and the forecast. But the actual, you will not see it until when the day the news is coming out, right? And when the time which the news it will come out. So now this actual will determine how the is going to really affect the market, either positive or negative, right? Either positive or negative. I'll also show you an example of maybe news that is not really out yet. So today is Thursday, and now it's already 8. Can't see any, there's no really strong news right here. So okay, so now let me use this for example, right? Now, something I need to really mention again, right? If you look at these folders here, see these folders you are seeing here. Now, what you need to really pay attention to, all these ones with yellow, they don't really have impact in the market, right, guys? They don't really have impact in the market. So what you need to focus on are the folders, those red folders. Something like this might be volatile in the market. Something like this might be volatile in the market. So you can see this one is Canadian dollar, this one is the Swiss franc. So maybe in case you're trading any paired with any currency paired with any of this that has this red folder as well, you should also check it, right? Should all this one they don't really have effect in the market, but like this one it might really have effect, right? You can see all the ones with red folder. This is CPI, right? This one will have very effect, right? So mostly be focused on the one that are red folder. That's where there's volatility in the market, right? So all this one with yellow folders, you can really ignore them. They are not really volatile in the market, right? So now I told you the first thing you should look at now is you don't need to be focusing and be trading all these things here. You don't need to be trading all these things, right? In fact, you don't even need most this thing. I say the only reason why I'll suggest somebody to come to check fundamentals, right? It's mainly when you're focusing to trade any of the news. Either we have three news, right? I don't know if I should already write that. Well, let's see if I can put that down. So we mostly have three main news that usually comes out in the market. So let me just type that here. So we have like three main news, like main news that is come out in the market. The first one we call it NFP. This one comes out every first Friday of the month, which is it means non-farm payroll, right? You can really search about it to know the meaning. The second one we call FOMC, right? We call it FOMC. Then the third one, we call it CPI. So these are the three news that usually comes out, right? So you just need to check your Forex factory or your um, fundamental analysis part to check when these news are coming out. So I told you the NFP, right? This is non-farm payroll, comes out every first Friday of the month, of every new month. So now let me just scroll down 30th bar. This is 30th. So what we just need to do is to scroll down to the new month, right? So this is first of March. So let's check the Friday of that of this new month. Now if you scroll down, you're going to see, so this is Friday 2nd, which is 2nd of May. I told you the NFP comes out, all this news comes out every month, right? This three news comes out every month, right? So you should pay attention. They come out every month. But the non-farm pay, which is the NFP, you mostly see it online. If you do watch all these TikTok, all these videos online, whether YouTube, Instagram, X, or TikTok, you mostly see. So NFP comes out the first Friday of every month, right? First Friday. So you can see this is, wow, this is Friday, May 2nd. On Friday, this is Friday, right? So if you check here, you can see non-farm payroll. So I thought these news are volatile, and this is mainly for employment rates, right? Employment rate in the country, that's the US. So now you can see any pair associated with the US dollar will have effect, right? You can see high impact expected, right? Because this is, I told you, just pay attention to the food. And mainly if you want to just focus on these three news, don't really be doing all this. So now this if non-farm payroll, and it comes out 1:30 p.m. Right, so this is in my country now. So when you check it to be in your own country, then you know which time you are trading it. But in my own country, Nigeria, we trade NFP every first Friday of the month around 1:30 p.m. Right, so you can see now. Let's go. Let's see if you can see this is CPI, but this is for the Swiss franc. But I want to really check the US dollar, right? So let's just go with for the US dollar as well. So this is still this same month. So you can see we have FOMC here, right? This is where the Fed, that's you mostly see the FED, that means the Fed, right? Those are the people that really cuts rates, right? They really cut rates. So you can also see this. So now this on Wednesday, right? The FOMC Wednesday, right? They have news here Wednesday. This is 7 p.m. So we can also check for the FOMC, right? That you can see this one, the US dollar. You can actually trade for these ones as well, based on this thing they are seeing. But I'm just focusing on the US dollar. That's what I'm really focusing on. So let's keep moving, because we're looking for the one attached here. So you can see the CPI, right? You can see the CPI, and there's also another one called PPI as well. PPI. So you can really search the meaning of all this. You can search the meaning. And there's another one again called PPI. I really search the meaning of all this on your own. So this, because I don't really have much time. So this is the US dollar. I want us to at least cover up half of what we want to cover today. So we can have at least maybe two more next to cover the remaining two classes. So this is CPI. You can see it's also for the US dollar, and this is also around 1:30 p.m. But this is usually on Tuesday. But still, as I said, these news happen every month, right? They happen every month. So this is it. So you can see this is the PPI as well. I just mentioned as well. So you can see this is the PPI. So these are the main news that are really volatile. But after this news, the many are not really, they don't really have effect like that in the market, as I said. So I want to give an example now of, maybe let me give an example of NFP, right? Let me give an example of NFP. So now let me click this. Now this one, so you can see for the NFP, right? For the NFP, the previous, that's one that came out last month, was reading 228K, right? 228,000. Why? What they are forecasting to be the, like, that is the next for this new next month, which is May, what they are forecasting will be the number will be 129,000, right? 129,000, meaning that it has dropped. But now this is what I want us to do. We are going to click on this, right? When we click on this, it's going to open because I want to show you something about this. So let me click on it. So, clicking. Okay. Um, okay. So maybe I'm going to use I wanted to also, okay. I wanted to just read something here. There's really something I'm looking for. I don't know if we'll see it here, but okay. Okay, this is what I'm talking about now. Actual greater than forecast is good for the coins. Now let's just read here. Let me just read a quick change in number of employed people during the previous month, including the farming industry. Like this now for NFP, right? So they say change in the number of employed people during the previous months, excluding the farming industry, excluding farming. So now they say actual, right, which is greater than forecast is good for the currency. Now, at this point now, there's no actual, right? There's no actual because the news have not come out for next month. So there's no actual. But now we're going to use based on the forecast, the forecast, and based on what our analysis, because first, when you want to trade news, when you want to trade the fundamental news, first thing you need to do is to go on your charts, do your technical analysis, right? Right. When you focus on your technical, write your do your technicals well. When you're done with it, know whether the price is going up, predict the market first on your doing your technical analysis, right, on your charts before you can now come here to so that you can see if the confluence is going to be is the same with based on what you analyze, right? So forget that news is out first, do your technicals, right, then come and check your fundamentals. So you can see actual greater than forecast is good for the coins. And so if now the forecast we're having here is 129,000, right? So that means the employment rates have dropped, right? That means they are not really employing a lot of more people in the United States, right? So it has dropped. So if the actual news comes out higher than this number here, then the forecast is good for the country currency. So you can see here, you see actual greater than forecast is good for the country, is good for the currency. So let's say the actual comes out like 150 or 200,000, right? So you can see it's very good for the country currency, meaning that the US dollar is going to be strong. So if you are trading anything euro versus US dollar, just know that if your technical is giving you for a sell, right? If you are selling euro USD, meaning that you are believing that the euro is going to be weak, while the dollar is going to be strong, right? Based on your technical, and then it's now um rhyming with your fundamental as well, right? It's also rhyming with your fundamental. That's what you should note. So you should take note of this. So you can just read two. But then the next one I want us to check, which is mainly the one I use. I use just the forexfactory.com, and I also use my FX book. So all you just need to do is just search for my FX books. Right, when you go to my Facebook, just go under the Forex calendar. Let me go out like this. So this is what you do now. When it comes to the Forex factory, it will open here, right? It will open here. So what you just need to do is to click on this economic calendar. You can see it here. So you just need to click on the economic calendar, and then it's going to open the news here. So you can see news. So let me just go down. Let's see if we can see for next month. Let me still show this NFP and read some things under it. So you just need to scroll down. Right? You just need to scroll down. Let's go to new month on Friday, which is 2nd of May. So I'm just scrolling down to so we can see the NFP. So Friday, NFP for the all right, see it here. So you can see this is the non-farm payroll, right? Now, this is how this is. So when you click on it, for instance, any of this, because so let's say we're clicking on this unemployment rate, right? Now, when you click on this, you can see more information, right? You can see more information here. So they say, if you can just read all these things here, then they say a higher than expected figure should be seen as negative bearish for the US dollar, while a lower than expected figure should be seen as bullish for the US dollar. So you just need to read all this and see which one really aligns with your technicals to be able to trade it well. So let's really move ahead. I want us to cover a lot today. So I've explained this too. So you can also check the investing.com and some other platforms. I mostly use the Forex Factory and my FX books. These are the most two I use when I'm trading NFP. And sometimes if and when I'm going to teach you the main analysis, my own strategy, right? The at most about maybe 80 to 90% or 95%, the fundamental news aligns with your technicals. If you get your technical right, fundamental will not really be an issue, except for some few cases, right? So now the next concept we'll be talking about in trading is what we call long. Now, when you hear me, maybe when I'm dropping signal, right, in the group, in Telegram group, right? So this is my Telegram group. Let me just maybe type that quick in case for my at least YouTube, um, anyone who will come across these videos as well of my YouTube community. So let me just open my Telegram group quickly. So this is my Telegram channel, right? So this is the group as well. So right? In case I drop signal, right, saying that probably this you should enter for a buy or you should enter for a sell. It means that what I'm trying to say is when I say, right, when I say long, long, just know that long means buy. So I don't have to be typing buy, maybe buy Euro USD or buy USD JPY or buy GBP USD, stuff like that. I can just say long, maybe BTC USD, meaning I'm saying you should long Bitcoin versus the US dollar, right? Or um if I say long USD JPY, I mean that I'm saying you should buy USD JPY. So in case you see me type long, long means buy. And in case you see me say short, short means sell, right? So we're shorting the market down. So we're going down in price. So that means sell. Then the next one means stop loss, SL. SL means stop loss. Stop loss is like the amount of money you are willing to risk. Now let me show you on the chart. So now let me use this trade that is actually going, right? Let me use this trade. Now, so when you look at this chart, right, this red point, so let me use this me analyzing my chart here, right? I'm just analyzing chart here. So from here, right, this point, at this point, this middle point that separates this red and blue, me that's like this point that separates me, that's my entry. This is when I entered for the trade and I entered for a buy, right? So this is where my stop loss ends, right? This at this point here, this is where my stop loss end at this point, right? So meaning that I'm telling the market that I want to risk a particular amount of money from here to here based on. So in case this price as is going up like this, right? In case this price drop and comes down, hit here, meaning that I should just lose this amount of money here that I plan to lose, right? Because let's say I deposited $100 to my account and I funded my account with $100. I'm not I'm not going to just place the $100. Expect if the market hits my stop loss, the $100 should go. No. Let's say inside that $100, I want to risk like $5 or $10, right? So there's where I'm going to enter for the trade. And when I enter the trade, what I'm going to set is that when this price comes down, hits my stop loss, which is this point from here to here is my stop loss. That is the amount of money I'm willing to risk on this trade, right? So if it comes down and hits my stop loss, I'm okay with that amount of or that $10 or $20 or $50 I'm willing to lose. I'm okay with it. Right, so that it will not keep on going down. Maybe if I do not put stop loss, so always make sure on every trade you enter, make sure you put stop loss. That is very, very important because if you not put stop loss and this price keep on going down, your money, you can end up blowing your account. So always put stop loss. I always have a calculated amount of money you're willing to risk on every trade that you're taking, right? So this is from here to here is my stop loss, meaning that this is the amount of money I'm willing to risk on this trade, right? So the next one we are talking about here is, so let's see. Next one here is TP. Now, TP means take profit, right? TP means take profit. So take profit, let's go back to our chart. So take profit means that from here, from my M3, from here to this point here, this is my take profit. So you can see I even put TP1 here, meaning that I'm okay if this price comes up all the way up here, right, and hits. So when it hits here, I'm okay. What I'm telling the market is, or my broker, is that when this price comes here, it should close me out of the trade. I'm okay with it. I'm okay with the profit I've made, right? I'm okay with the profit I've made. This is what take profit means. So this is your stop loss from here to here, right? That is the amount of money you're willing to risk, right? This is your take profit from here to here. So in case, let's say, now this is for a buy. Now, if you're entering for a sell, right? Right, if you're entering for a sell, So you can see stop is straight. So this is the amount of money you're willing to risk here. So you can really adjust it, depending on how much you're willing to risk on every trade. And then this is your take profit. You can see showing target. So this is for a sell if you are selling, right? So if you are saying that if the price is selling, right? If the price is selling, right? If the price is selling, you're telling the market that if the price goes up and hit here, it means that you're okay with the loss, right? You accept your loss, you're okay with this, and you're out of the trade, right? But if it doesn't hit your loss and keep on going down, what you're simply saying is that, okay, I'm okay with this profit. I'm okay if the market can pull all the way up here and then hit my take profit. I'm okay with it. It should take me out of the trade as well, right? So this is what I mean by take profits, right? So because this is your stop loss from here to here, which is the amount of money you're willing to risk. Then this amount of money you're willing to make. That's you're risking this amount to make this amount, right? You're risking this small amount of money to make maybe a huge amount of money. So always have it in mind that the amount of money you're willing to risk, the amount of money you're willing to make should be far much more than the amount of money you're willing to risk. So if I'm willing to risk $10, right, my target is to make like $50 on that trade, or 60 or 70, right, or 40, right? That's my target. Take profit. That's what I want to make, risking only $10. So I hope you understand that. Then the next one is called risk to reward. That's means risk to reward ratio. Now, risk to reward ratio is potentially what I just explained now. I'm risking a particular amount of money to make an amount of money. So let me just cover on this. Now, if you check down here, you're going to see risk to reward ratio, right? Here, and you see that it's showing 6.69. You can see it's 6.69. Now, what this thing is trying to tell you is that I'm risking a particular amount of money to make 6 times the amount of money I'm risking. Let's say if I'm risking $10 here, right? If I'm risking $10 here, my take profit or my risk to reward ratio is 6 times the money that means what I want to make as take profit is 6 times my loss, right? So if this thing hits my stop loss, I'm going to lose $10. But if it hits my take profit, I'm making $60 plus. So you can see the risk to reward ratio now is very, very good. So always have at least the minimum. To me, based on how my strategy is, right? I think my risk to reward mostly the least is like 1:4, right? 1:4. I think that's like the least. I've not really seen maybe 1:2. So my risk to reward is like 1:4, 5, 6, 7, 8, like that, even up to 12, 15. Right, so that's how my risk to reward is. So this is risk to reward ratio, meaning that is times the amount of money you're willing to risk. So I'm risking, let's say $10 or $20, for instance, to make 6 times the money that I'm risking. That's what risk to reward ratio mean. So you can see it here on your trading view. You see it's 6.69. That means if I'm risking $10, I'm expecting to make 60.69 dollars. That's what I'm expecting to make. Now, the next one is break even, right? Break even. We just have like a few minutes. The next one is break even. Now, break even means, now let's use an example of this same trade, right? This same trade that I took today. Now, what's break even means is that this is my entry, right? This is the point where I entered for this trade, right? At this point. Now, this was my stop loss. My take profit was up. So now break even means it happens when this is something you're going to initiate yourself. Now, you only initiate it when at least the price have gone at least like 20, 30, or even 40% um in your way. 40, like now, the way this trade is now, right? The way this trade is now, I can simply move my stop loss to break even, meaning that if the price is already going my way, at least, like, if you look at this from here to here, it's already more than based on your eyes, already more than, at least it's about 30 to 40% in my profit target, right? My profit is about 30 to 40%. So what I can simply do is, now I'll move this my stop loss. This is where my stop loss is, right? I'll move this stop loss to come to my entry, right at the right point where I entered. That's where I'm going to put it, right? All this place is just for nice. I'm going to show you on the main chart when we reach that aspect. I will explain more of this, right, that I'm talking about. So here was my stop loss, right? This was where I put my stop loss to be, right? Now break even is to move your stop loss to here, to this point. So in case this price now comes down, for instance, comes down like this, I hit here, right? It means you're not losing any dime, you're losing nothing. right, guys? You are losing nothing. You are not even based on how much you enter, right? Except maybe for commission or maybe all those things, but you are losing nothing. The same if you had $100 in your account and you're risking like $10, and you put your stop loss to break even after the price have gone in your way, you are not losing anything. In case it comes back and hit your break even, which is your stop loss, meaning you are not losing anything. You're telling the market that now I'm risk free. I'm not risking any money now. I'm totally free. If this trade continue to go my way, fine. If it comes out and hit my stop loss or my break even, meaning that I'm okay, I'm out of this trade. I did not lose, I did not gain. That's simply what you're telling the market, right? So break even, you always put it at least, let it go, right? It should go at least let the price go at least 30 to 40% or even 50% your way before breaking even. I shall don't use this on my strategy. I don't use it. It's either stop loss or break even because I take a plus setup. I don't just take any trade. If I don't see my strategy, I don't trade for that day, right? So like this now, I don't usually do it. I'm just explaining what break even mean on this class in case of any other person that is maybe using their strategy. So always put your break, if you are doing break even, you break even after the price have gone like um 30-40% in your favor, then you can break even, meaning that you're going to move your stop loss from where it is to your entry point. Just exact your entry point. That is what break even means. So let's see again what we can cover. We just have like 3 minutes. So the next one we'll talk about, we'll end here, is partial profit, right? So partial profit is now you moving. Now, when you have moved your stop loss to break even, right? Partial profit now is for you to move this your entry now. That's your break even that you put here, that you put it in your entry. You push the price maybe all the way to this up here now. Now you can do something. You can push your entry now. That entry that was here before initially, but initially your stop loss was here. You now move your stop loss to break even. Now for partial profit, it means that you want to take a little bit of the profit you are making because the trade is still going in your favor. So you can maybe put your take profit maybe probably around this point, right? Right around this point. So in case the market comes down like this, the way it's going up here, in case the market come down like and hit here and hit this your partial profit that you have taken, it means what you have telling the market that you're out of the trade, right? But you're okay with the little profits you have taken from here, right? With the little profit you have made from here to here, right? You are okay with it. This is what you are really telling the market there. Okay with this profit here, right? This little profit you have gotten, you're okay with it. That is what partial profit means. So in case this price, for instance, if this price continues to pull up to this point, right, as it's going, let's say the price comes to this point, right, you can move this your partial profit that I've put here. You can move it probably to this point here, right, to this point here. If the price is around here, right, around this point. So if the price is around here, you can still move your partial profit. You can take it, or meaning that you're saying if in case the market comes down and break and hit this place, you're okay with the profit you have made from here to here, right? You have locked, meaning that you have locked this profit now. So there's no way you lose this amount of money here because you have locked it, meaning that this one now is you have locked it. There's no way you can lose it in case even if the price eventually like comes down to hit it, meaning that you are already out of the trade, but you have made some profits from here to here. That is what partial profit mean, right? That's what partial profit means. So I think we'll be stopping here for today. Tomorrow we will continue from uptrend, downtrend. I'll really talk more about this, right? But for today, this is where we're going to stop partial profits, which is number 7, right? So I hope you understand really what I've said. So if you are confused, you can still just um go through what I said. Just watch the video again, right? Just sit down, watch it again over and over again. You'll be able to understand what I really mean, right? You'll be able to understand what I mean. So I think that's all for today, and we're going to continue tomorrow, same time. So tomorrow now will be the part 9 of this key concept of forex trading, right? So we'll continue from where we stop. We'll continue from uptrend, downtrend, ranging market, all those things. I will also talk about more of those. So now this is my Telegram um channel, right? This is my Telegram channel. So I do drop fundamental news as well, right? I drop signals, and you can really join as well. So do well to we learn together, make money together. And for my YouTube community, right, though I'm still holding this trade, I expect my full take profit to be here. I expect this price to reach all the way up here, guys. This is why I expect this price, which is crazy. This like so okay, let me just go back and bring up what I did because I want to really show something here. So as I said, this is where I really plan to take profit on this trade, right? So you can see this is my take profit one, take profit two, take profit three. So I really plan to take profit here. So now about the risk reward I was showing you, I'm risking, let's say, a little amount of money, and my take profit is here. This is my final take profit. If I'm to hold it all the way up here, my final take profit is here, and you can see the risk to reward ratio is 15.59, meaning that if I'm risking, let's say I'm risking $10 here, right? I'm risking $10. What I'm expecting to make, or what I'm predicting that I'm going to make, is about $150 plus in the market. That's what I'm expecting to make, me just risking $10. So you can see how risk to reward ratio can be. So in case let's say I'm taking 5 trades, right? And I lose four, for instance, and I lose four, and then I lose 4 trades, right? So let's say I have $100 account. I'm taking 5 trades. I lose 4 trades. 4 trades meaning $40 is gone because I'm risking $10 on the trade, right? I'm risking $10. So $40 is gone. Remaining okay, let's say I'm risking $20, right? Let's say I'm risking $20 per trade, and I have $100 in my account. So I took 4 trades, which is $80. $80 is gone. Remaining $20 on my account now as my balance. Now I reach that last $20, targeting to make 15 times the $20. So if you calculate 20 times 15, that's I'm risking. So let's just do a quick calculation. Let me just search that on Google. So that's $20 times, okay, let me put that also in dollar, times 15, right? 15. So this is what I'm expecting to make, $300, right? Me just risking $10. So you can see how risk reward ratio can be very, very good, right? It can be very, so I have $100 account, right? I lose 4 trades. I only have one life remaining. That's the last $20 I want to risk on the trade, on the next trade. And if I lose that, the account is gone, right? But I now win that, targeting 15 times, or even if you are targeting, guys, even if you are targeting, let's say here this trade now, I'm targeting about 6 times my money. If you still calculate this, it's still more than my initial $100, right? It's still more than my initial $100. If you want to really do the calculation, you can see. So let's say $20 times 6, right? Times 6, you can see this $120. I'm still in profit. Guys, I'm still in profit. This is not me taking it all the way up here, right? This is not me making like 15. This is just me making like 6 times the amount, right? Which I'm sure this price is going to hit break up here. This means making 6 times more, and I'm still, I deposited 100 and I lost 4 trades. I won one, and that one cover up my losses and still gave me a profit of $20 on top. So you can see how good and how effective this risk to reward ratio can be, right? So this will be stopping for today. And another thing I really want to mention is for my YouTube community. So this is my channel, right? So before you watch this part 8 of the video, so this is my YouTube channel. You can come here. We're actually growing. We have just 80 subscribers now, right? So you can watch these videos here, guys. You can watch these videos here. This beginner join the Forex trade. This is what you here in this video. You learn what is trading, what is Forex trading, how do you trade it, currency pairs, and all those things. You learn this here. Here you can, it's still the same thing I talked about, right? But here I was really doing it on a white marker board. Then here, this when the main class started. So you can watch this introduction to candlestick part 1. You can watch the part 2, part 3, 4, 5, 6, 7. This video that I'm talking about, this is the part 8 of this, right? So you can, before you watch this one, make sure you have watched these videos so it will be easy for you to grasp. Don't just start learning Forex and you're jumping from A, you move to Z, you come back to D, you come back, you went to M, you move to S, like that. Don't learn. I did it when I was learning initially because I didn't really have anyone to like guide me following that step gradually. But this now, I'm giving you this content for free, guys, online. So please do watch it, follow it step by step. Don't just be skipping. Don't jump to part 8, part 9, part 7, and still go back to part 1. No, start from the base. In fact, start from here. Move to this one. Watch part 1, now 2, 3, continuously like that. Follow it step by step, guys. You'll be able to understand it. And also, don't forget to like, share, and subscribe and comment, for especially for my YouTube channel, my YouTube community, or anyone who will be watching this video. Please don't forget to like, share. These are the possible ways you can support this channel by liking, sharing, and commenting as well. Subscribe to the channel and also share to other people that you believe that they will need this content, right? That will help them in their trading journey. You can share this video to them as well, guys. You can share it to them. We are really going, we are bringing more and more and more of this content to you, right? We're bringing more and more content. Another way again you can support us and what we are doing is by donation or sponsorship, which our official WhatsApp number will be in the description below. So you can also do that to contact us. And also for mentorship, right? For mentorship, you can as well contact us for both beginners, advanced, and those who want to take their trading journey to the next level. Right? You can also contact us on our official WhatsApp number in the description below. So with that being said, guys, I'll see you in the next part 8, part 9 of this video. So I think that's all for today, right? That's all we need to just cover for today. So um I think that's also that being said, guys, I think we'll be stopping here, right? We'll be ending the class here, and I'll see you in the next class. Peace out.